So, of course, after a tumultuous 2022, three key themes are unfolding in the early part of this year as investors continue to pick up the pieces of a tarnished sector. Now, firstly, the regulatory crackdown is gathering pace.
There is lack of any clear, coherent regulation here.
As we've had Congress having hearings talking about crypto regulation, the SEC here is stepping in and doing it. Do you think that they're doing it in the proper fashion?
Many fraudulent activities in the crypto space last year could have been avoided if there was regulatory oversight of crypto asset platforms in unregulated markets. In this video, Kevin O'Leary explains why we need regulation in crypto space. He has also shared his own experience, how the FTX collapse affected his investment and future viewpoint of investing in crypto. For more videos on economy, crypto, and market trends, be sure to subscribe to my channel. You can also hit that bell icon to never miss any video. So, how far behind are we in regulating crypto? And how will it affect the crypto space? But first, let's dive into why the market needs regulation.
Prior to the FTX collapse, and every week there was another crypto company blowing up and going to zero. But now they're getting really large in terms of how much capital is being gone. Just last week, Genesis filed again. This will continue over and over again, and so they'll keep going to zero because there's absolutely no guardrails in this industry. However, what's different now is, and I spoke to the senators at the FTX hearing after we'd finished them, and there was a chance to just get a feel of the tone of Washington. There's a fatigue coming into their thinking. They're tired of having hearings every 6 months when the next crypto company blows up and goes to zero.
Does that mean we just get rushed to resolution, though?
I think that's what's going to happen. The heavy hand, and Gensler gave you that tonality last week on staking. He made it damn clear that he doesn't like it. And he, on the Kraken deal, he said, we just shut it down. Now, if you don't hear, read the room, everybody. Just look what I did. I shut down staking. Now, that takes the value of cryptocurrencies down a lot if they can't be staked. So this is the kind of environment we're in. The industry was unable to self-regulate itself. And, let's be honest. Every human heart has greed in it. And we are given the opportunity to issue worthless tokens with no guardrails. And, the BNB and the FTT tokens, those are worthless. And, of course, these exchanges are going to go to zero because at some point somebody calls the cash transaction back to USD. So right now, take for example, BNB is 64 billion of market cap. The only reason to own that token on Binance is to get a discount on trading fees. What's the intrinsic value of that token? Nothing. It doesn't give you access to the equity of the company. Now, if you go look at the wallets, there's only 2 wallets that have 97% of all of those tokens. I wonder who owns those. What happens if one of them says, I want cash? Does Binance have 34 billion USD of cash? I don't think so. So my whole point is these things will keep blowing up over and over and over again. And finally, the senators are saying on these committees, we're done. Let's put the heavy hand of regulation down. And that's probably a good thing long term.
If there is one thing that has come to stay in the crypto ecosystem, it is effective regulation. Well, you might say that the government is not supposed to be involved with the sector. But recent events have ensured that a watchdog might be necessary for a market worth billions of dollars. As the crypto crackdown continues, the U.S. Securities and Exchange Commission said to impose new rules for crypto firms. According to Kevin, the move is really necessary if we don't want any more companies blowing up. In his own words, heavy regulation is a good thing long term. Let's get into the next clip to hear more from him. But before jumping ahead, be sure to like and share.
What gives you any confidence to put your assets in any exchange anywhere that isn't regulated? That's like saying, are you willing to trade on the New York Stock Exchange? Yes, I am. There are rules. NASDAQ? Yes, I am. There are rules. The regulator sees every transaction. It's a mark-to-market in every case. These exchanges are no different than those. There are rules already established that exist for the New York Stock Exchange. And so I'd like to see these rules. Now let's talk about what's on the Hill, because you brought that up. Senator Loomis, and is now moving that bill forward again. Toomey was the senator that was pushing for regulation on digital payment systems. Now it looks like Haggerty's going to pick up the baton, if you want to call it that, because Toomey is retired January 3rd. But the point is, you're seeing these hearings, you're going to see more of them, And every week, we're going to be talking again together about the next thing that went to zero, because there's plenty of zeros coming to a theater near you until we actually force regulation on this. Because who wouldn't make a worthless token? I mean, think about it. What do you need a token for that's supposedly ownership in the exchange? You're not allowed to do that in a bank. You're not allowed to do that in the New York Stock Exchange. If you want to buy a piece of the New York Stock Exchange, buy the equity of the exchange. The same thing should be for any exchange anywhere.
Crypto experts insist digital is the future of finance. Hence, the industry must be regulated in the same way as the traditional financial system. Today, the importance of regulation cannot be overemphasized, as it is critical to the growth of the crypto ecosystem. Alternatively, financial watchdogs overseeing the crypto market within their jurisdiction can help with asset regulation and thus prevent investors from committing money to rug pull projects. But whoever does it has to sit down and come up with the rules of the road that explain everything from how you offer interests in these marketplaces, how you protect investors, how you verify assets, and make sure that people are not being scammed. When they are scammed, obviously, you have to throw the book at them. But you need a book first, and that's what's missing right now. Kevin also highlighted that. What we need in crypto space are guidelines for how people should conduct business going forward so they can comply with investor protection and the rights of people who invest their money.
As soon as I got wiped out on FTX, my holdings there, I took every other asset that was not in those wallets and moved them up to Canada under the OSC order inside of BitBuy. So now I've got a regulator keeping an eye on my account. Everything came out of the US. I'm not putting anything ever into an unregulated exchange again. But I also loaded up on Bitcoin when it was in that $16,000 to $17,000 range. But here's something I've learned everybody should think about. Everybody's got to do their own diversification. But I used to hold 32 positions. So I'd look at the vol on 32 positions. Now I only own 7. I'm getting the same vol. You don't need to own 32 tokens to get the vol. You can just own a few and you'll get the same volatility up and down. So now I'm more concentrated in a Bitcoin, a Polygon, an ETH, that kind of thing, HBAR, very, very selected projects, very selected tokens, and I have liquidity in, and I like to stake them. The good news for BitBuy in Canada, it's one of the only 2 licenses where you can stake. So I've got my Polygon staked there, which is great, and you're getting some kind of yield, and it's regulated. So what I'm telling everybody to ask me is, look, you can get the whole exposure to the entire crypto market with under 10 positions. And that's the way I'm playing it going forward. I don't want to manage 32 anymore. I got a real lesson in life on that whole thing with FTX. But now I'm still back in one of my best performing asset classes. You said it, crypto since Jan 1. But you try telling anybody that. They're so negative on crypto. I like it when everybody hates a sector. It's like energy 18 months ago. I hate energy because Biden hates energy. That was the time to load up.
One of the most significant challenges facing the cryptocurrency industry is the lack of global regulatory frameworks, since cryptocurrencies are set to have a bigger impact on the global financial system. A strong regulatory framework will help protect investors, tackle criminality, and reduce the potential possibility of disrupting financial stability. Kevin has also highlighted that the survival and success of this new financial order depend on one crucial factor: global crypto regulation. Do you agree with him? Do we need global crypto regulation? Can regulation prevent more crypto companies from going zero? How long will it take for crypto space to get a strong regulatory framework? And how will it affect the crypto prices? Let me know your thoughts in the comment section below. For more videos on economy, crypto, and market trends, be sure to subscribe to my channel. Also, don't forget to give a big thumbs up to this video. I'll see you guys in my next video. Adios, and thanks for watching.